Hello and welcome to another week in the markets, another week of trading psychology. Now, before we start, I just want to emphasize and reinforce that I'm here to support you. I'm here to support you on your journey. So if you have any questions around trading psychology, performance, your mindset, emotions, if you need any support, please put a comment in the link below and I will answer. So I'm excited today because this is one of the most important things for traders. And the presentation today is on managing emotions during trading setbacks. Now, I'm sure all of you at some point have experienced a setback or a loss in trading. It is part and parcel of trading. Now, how did you overcome this? Did it take time? Did you get straight back? Too many traders hold on to losses and setbacks. This isn't the way. I'm going to show you how to overcome setbacks and losses in a whole new way so that you bounce back quicker and better than ever before. Let's move into our presentation today. And please take notes if you wish. So, how do emotions affect decision making? Because they do. The impact of emotions on decision making is profound because it often overrides our logical reasoning processes. For instance, heightened emotions can cause impulse decisions and reactions. Now, recognizing the influence of emotions on decision-making is the first step towards reducing the negative effects. Now, successful trading requires a balanced approach that integrates both emotional intelligence and logical thinking. The most common emotions traders experience during setbacks. So, what are they? We're going to go through these now and the most common ones. Trading setbacks can trigger a wide range of emotions, each with the potential to influence your trading behavior and overall performance. Now, understanding these common emotions is the first step towards managing them effectively. So let's dive into some of the most common emotions that you as traders can experience during setbacks and losses. So we have got the most common one here, and it's fear. Fear is the most common emotion that traders face during setbacks and losses. The fear of losing more money can lead to hesitation, causing you as traders to miss out on potential opportunities. Fear can also result in irrational decision making, such as exiting trades too early or holding on to losing positions in the hope that things are going to turn around. Now, this emotion is particularly potent after a series of losses. It will lead to a cycle of fear-based trading decisions that is just going to further erode confidence and potentially your capital. The next one is frustration. Now, this is the most common word that I hear from traders. I'm frustrated. I feel frustrated. And, I understand. I do get it. Trading can be frustrating, but it can also be extremely rewarding once you work on your psychology. So frustration arises when the market doesn't behave as expected, or when trades go against you despite thorough analysis. Also, frustration generally can come from if you haven't stuck to your trading plan. So traders become frustrated with themselves quite frequently. Now, this emotion can lead to impatience and a desire to get back at the market. This often results in revenge trading or overtrading. Now, we know that revenge trading is characterized by taking impulse trades to recoup losses quickly or that urgency just to succeed. Now, frustration, again, is another emotion that can really affect judgment. It can be difficult to stick to your trading plan and maintain discipline. Now, the next one is anger. Anger often follows frustration, especially when losses are perceived as, say, unjust, or when external factors disrupt your well-planned trades. Now, this emotion can be directed towards the market, yourself, or external factors. But anger can lead to aggressive trading, such as increasing position sizes, and that's when traders can generally go from trading to gambling. So it's really important to be mindful of your emotions. But further on in the presentation, I am going to be sharing and helping and supporting you and showing you ways how you can manage these emotions better. and overcome losses and setbacks. So the next one is regret. Regret, we've spoken about this before in a presentation, but it is a powerful emotion that traders frequently encounter. And this comes after realizing that a different decision could have led to a better outcome or a missed opportunity. Whether it's the regret of not entering a profitable trade or the regret of not exiting a losing one, this emotion will linger and affect future trading decisions. Now, regret will only cause hesitation and second guessing, and it will start to reduce your ability to act decisively and confidently in the market. So next is anxiety. Anxiety is a really strong emotion and it can feel really uncomfortable. So again, we worked on a presentation before to help to reduce anxiety around trading, and I hope that's really helped. But anxiety is a strong emotion and it needs to be dealt with. It needs to be managed. So it can really lead to overtrading. It can affect you outside of trading. So one of the best techniques for anxiety is breath work, but we'll talk again more about that. Now, the next one is despair. So despair sets in when losses accumulate to the point where they seem just overwhelming. Now, this emotion can lead to a sense of hopelessness, and it can also cause a lack of motivation to continue trading because you've got that fear, you've got that despair, that hopelessness, and that's when generally the self-critical talk comes in. So despair can cause you to abandon your trading plan, take excessive risks in an attempt to recover losses, and also this emotion can be particularly dangerous as it can undermine long-term trading success and your personal well-being. Now, the next one is overconfidence. Interestingly, overconfidence can also emerge during setbacks, particularly after a few successful trades that create a false sense of being invincible. Now, overconfidence can lead to taking on more risk. This means that you disregard your risk management and you start making impulse decisions. Now, this emotion can quickly turn into a very big setback. So again, it's about being mindful of your triggers, your behaviors, your actions, and having that self-awareness is key. So what are the different types of setbacks in trading? Because there's many. Have you ever wondered why some trading days seem impossible, whilst other trading days just flow effortlessly? Now, setbacks are a common part of trading, and understanding the different types will help you to manage them more effectively. So first off, let's look at emotional impact. Setbacks and losses can trigger a cascade of negative emotions like frustration, anger, and despair. Now, these emotions can lead to impulse decisions, and this can further just make the problem even worse. The fear of loss is especially powerful. Often traders, they just freeze or they make irrational decisions. It's natural to feel these emotions, but they can significantly affect your ability to think clearly and to respond effectively. Now, every trader carries a memory of past mistakes and failures. These can become psychological barriers. These memories create self-doubt, fear, and it makes it difficult to move forward. The trauma from a significant loss can really linger, and it can affect a trader's confidence and decision-making in the present and the future. So the next one is loss aversion. As humans, we are wired to avoid losses. This is known as loss aversion, and it makes it challenging to accept losses and move on. So traders may hold on to losing positions longer than they should, hoping for a turnaround, or they might avoid entering trades altogether due to a fear of further losses. Now, I've worked with many traders in the past who have got to the point where they just simply cannot push the button because the past has really weighed down on them. And instead of entering a setup that they know is going to work and it's got a high probability, they will just avoid it. But it can change and it can turn around. Next, we have overtrading. Now, we've spoken about this in another presentation in depth. So overtrading in an attempt to recover losses quickly. Traders can often fall into the trap of overtrading. Now, this desperate need to get back the lost money can lead to a frenzy of trades without proper analysis. Overtrading increases exposure to higher risks. It's that vicious cycle that can be really hard to break if you don't recognize the underlying drivers and the emotions and the subconscious reasons why. Next is lack of patience. So, as we know, patience is a virtue in life and in trading. But setbacks can test patience severely. Impatience can lead to revenge trading. It can lead from you preventing sticking to your trading plan, making irrational decisions. The pressure to perform can come from various sources as well. Financial obligations, family expectations, or this urgency to just succeed. Now, this external pressure will amplify the stress of trading, and it will make it harder not only to overcome setbacks, but to be a patient trader. When you're trading to meet external expectations rather than focusing on your long-term goals, you're more likely to make mistakes. So it's important to trade with a clear mind, free from outside pressures. And remember as well, when you trade, it's important to detach from the outcome of the trade, the financial reasons. Just follow your process. Next is market volatility. Now, there's always going to be volatility in the markets. So, as we know, this involves rapid or significant fluctuations in asset prices, which can be driven by economic events or announcements. So, volatility can create opportunities for profit, but also increase the risk of losses. Managing market volatility requires a flexible trading mindset and approach. Now, this includes being flexible with adjusting position sizes. Again, you may need to change your strategy slightly or change it altogether, but you will decide that. But staying informed about sort of the economic news is always a good suggestion. So by understanding the different types of setbacks in trading, it's essential for developing strategies to manage them going forward. Now, why do traders find it challenging to overcome setbacks and losses? I understand how challenging it can be for you. I do. But I'm here to support you and to show you how to get through these times. Let's look at the reasons why traders find it challenging to overcome setbacks and losses now. So first off is the emotional impact of losses. One of the main reasons why traders struggle to overcome setbacks is the emotional effect from financial losses. Losses can really bring up strong emotions such as fear, frustration, disappointment, and these emotions can really lead to stress, anxiety, and irrational decision-making and self-sabotaging behavior. The fear of losing more money can cause you as traders to avoid taking necessary risks, while frustration can lead to revenge trading. Now, this emotional roller coaster can really create a negative feedback loop, which makes it difficult to regain composure and confidence. So next is psychological biases or biases. Biases play a significant role in how traders handle setbacks. So again, loss aversion, for example, it makes it painful or makes the pain of losses feel more intense than the pleasure of gains. This can cause you to hold on to losing trades for too long. Confirmation bias, that might lead you to seek out information that supports your initial analysis, even if the market really contradicts it. Overconfidence again. As we know, this can cause you to undermine risks and overestimate your ability. So next is a lack of a solid trading plan. Now, it's really important, and I'm sure you all know, without a well-defined or structured, clear trading plan, it is so easy to become overwhelmed by setbacks. Now, having a clear plan and long-term goals provides this kind of roadmap, this kind of journey, this guide that you need to know when you're entering trades, you're exiting. You know, it's that clear plan that every trader needs. So without it, you just might react impulsively to any market movement. This is a real problem. So developing and sticking to a good, solid trading plan is absolutely crucial for maintaining discipline and consistency. So, next we have inadequate psychological preparation. Basically, mental preparation before you enter the markets. Trading is a mental game, as we know. So, many traders focus solely on just before they trade, doing their analysis, checking the markets. But what is really important before you enter your trading session and your day is that you mentally prepare. We'll talk more about the techniques going forward. Having that emotional resilience and mental strength is so crucial for overcoming setbacks. Next is the pressure to perform. The pressure to perform and achieve consistent profits can be overwhelming, especially for those who rely on trading as their primary source of income. This pressure will lead to stress, anxiety, hasty decisions, fear, and so much more. It's really important if you're a trader and trading is your only income, you really need to work on your mental strength. So, by understanding these challenges and implementing strategies to manage them, you'll start to become a more resilient trader, disciplined, patient, helping you to just focus on your long-term goals. So, let's talk about the biggest setback for traders: losses. Out of every single challenge, setback, obstacle, this is the most evident challenge and setback for traders: losses. Now, we know that losses are part and parcel of trading, but it's ingrained in us as humans that we just don't like losing, and we most certainly don't like losing money. And that's why it can be really difficult for traders. That's why the fight or flight can come in generally most of the time. It is that fear of losing money. So no matter how experienced or skilled you are, encountering losses is something that we all face, or that you all face as traders. Yet despite this, losses remain the biggest setback that you will experience as traders, I'm sure. Now let's dive into the reasons why losses are such a big deal for traders. So next is, it's really important, financial strain. The financial strain caused by losses cannot be underestimated. Trading with real money means that losses directly affect your capital. And for those relying on trading as, your only source of income, this financial strain can be very stressful. Now, the pressure to recover lost funds can lead to increased stress and anxiety. And I've seen this many times over the years. This can really become a negative cycle. Financial strain can also force you to make desperate decisions. And, this means, again, such as increasing position sizes or taking really excessive risks. Now, this approach will lead to further setbacks. So next, it can really disrupt trading plans. Losses can disrupt your carefully solid trading plans. Again, it's that emotions or the emotions coming over where you find it, or some traders find it impossible to stick to their trading plan. So it can also have an impact on long-term goals. Every trader enters the market with long-term goals and aspirations, whether it's financial independence or freedom of time. However, significant losses can feel like a setback that pushes these goals further out of reach. This discouragement can really accompany larger losses and make it difficult to stay focused on your long-term goals. Now, this shift in focus will lead to short-term thinking and reactive decision-making. So this is generally when traders can go on tilt. So instead of continuing to focus on your long-term goals, you're just out to recoup the losses. Now, this can be a very destructive behavior. Again, let's talk about the emotional impact losses has for traders. Now, of course, there are many traders out there who just accept losses. They just accept losses. They move on. They know it's part of trading. And they're the traders, if I'm honest, that are very successful because they don't hold on to the losses. They just move forward. They know it's part of trading and they focus on their long-term goals. So let's go back. Now, when you experience a loss, it can really bring up a range of powerful emotions such as fear, frustration, anger, and disappointment. These emotions are not beneficial. And so the fear of further losses can really paralyze traders. It can lead to hesitation and inaction. It can really also affect confidence. And, we know that confidence is an essential aspect in trading. However, experiencing losses can really erode and affect confidence. So the next is psychological biases. Losses can trigger a range of psychological biases that further compound the problem. Now, one of the most common biases is loss aversion, the tendency to fear losses more than valuing gains. Now, one of the things that I've seen over the years many times is setbacks and losses can have a huge influence on a trader's personal life. The impact of trading losses extends beyond just your trading. The stress and anxiety can cause or spill into your personal life. It can affect relationships, health, and your overall well-being. The constant worry about finances or financial stability and performance pressure can lead to sleepless nights, decreased motivation, and stress and anxiety. And balancing the demands of trading with the need to maintain a healthy personal life becomes increasingly challenging when dealing with the fallout of losses and setbacks. There is also a certain stigma associated with losses, especially in the trading community where successes is often measured by profitability and success. And sometimes admitting to losses can feel like admitting to failure, but this will only lead to isolation. So traders might find that they withdraw from trading groups or avoid discussing setbacks. Now, this isolation will only deprive you of valuable support and the opportunity to learn from others. So it's important that if you're going through a difficult time with setbacks and losses, that you talk to somebody. And of course, I'm here to support you too. So, overcoming setbacks and losses. Have you ever felt overwhelmed by emotions while trading? I'm sure the answer is yes, because every trader at some point has. Mastering your emotions will significantly enhance your trading performance and your overall life. So let's explore some powerful strategies to help you keep your emotions in check and make more rational trading decisions. More importantly, helping you to overcome setbacks and losses faster and with more resilience. Okay, so the first one is self-awareness, the foundation of emotional mastery. Understanding your emotional triggers is the first step towards mastering them. So why is this? Well, if you're not aware of your triggers, your emotions, your behaviors of you, then how are you going to change them? Pay attention to how you react to various trading scenarios. Do you feel anxious when the market is volatile? Do you get overly excited about a series of wins? Now, recognizing these patterns, you'll start to manage your emotional responses more effectively. One of the things that I do highly recommend, and I've mentioned this many times, keep a trading journal. It is immensely helpful. Write down your trading day, your session. How did you feel before you even entered the session? Were you calm? Were you focused? Did you sleep well? Really start to invest in this time because it is so worth it. Knowledge is power. So next is a technique that I've never recommended yet, and that's art therapy. So engaging in creative activities such as drawing, painting, or even sculpting can help you to manage and process your emotions. Art therapy provides an outlet for expressing feelings that may be difficult to articulate any other way. Now, this creative expression will reduce or can reduce stress. It can improve mood and enhance emotional awareness. So you can set aside time for art. You can just take time to just draw. Even coloring is really helping people who feel anxious and stressed to feel a lot more calmer. Mastering your emotions is a continuous journey, but with these unique strategies, you can develop the emotional resilience and patience and confidence to help you bounce back from setbacks. So we're going to talk about the last technique now. Now, many of you or some of you may have heard of this technique. I can never pronounce it, so I'm really sorry. But this last technique I highly recommend for letting go of regret, past mistakes, for forgiving yourself. It can help with mental strength. This technique or practice is helping millions of people around the world with different things, not just traders. The technique or practice is called Hoponoponopo. Now I can't pronounce it, so I do apologize. But this technique is a Hawaiian spiritual practice that emphasizes forgiveness, reconciliation, and healing. Now, for me personally, I have used this practice over the years for different things. I obviously use a lot of hypnosis, but sometimes I like to use different techniques and practices. This one I highly recommend, and it is simply about 4 mantras and listening to them, or you can say them in your mind, or you can say them out loud. Now, be mindful with this practice. When you start, it can bring up some powerful emotions that are being suppressed. You may find that there are tears that come up. You may find that you feel angry. Just go with this because it will pass, I promise you. And again, if you need any support or help, I'm here to help you. But it involves 4 key phrases or mantras. And they are, I'm sorry, please forgive me, thank you, I love you. And you can just listen to them on repeat. And again, you can listen to them at nighttime whilst you're falling asleep, in the daytime, or you can say them to yourself. They are very powerful mantras and phrases, and they will really start to shift a lot of stress, anxiety, frustration, and even anger. So the practice is based on the belief that we are responsible for our experiences and that healing begins with taking personal responsibility for our thoughts, actions, and emotions. Now, this practice is not just about seeking forgiveness from others, but also about forgiving ourselves and accepting personal responsibility for our emotions and experiences. It is a simple yet profound technique that encourages self-reflection, compassion, and inner peace. So by listening to this, you can engage in a powerful practice of self-healing and emotional clearing. So as we come to the end of our presentation, I hope that this has helped in some way. I hope that you've taken at least one thing that's going to really help you to overcome setbacks and losses. You know, I do understand trading can be challenging. There's so many different challenges that trading can bring, but it can be so rewarding. Now, I'm here to support you and help you. If you have any questions, if you're having a difficult time with, setbacks or losses, I'm here to help. So just put a comment in the link below, and thank you for joining me today. May your trading be guided by wisdom, patience, and the courage to persevere through every setback. See you next week.